Hey everyone, welcome back to Corporate Decoder, the place where we decode the future of business with a smirk and a spreadsheet. Today we're diving deep into Amazon's Q2 2025 earnings report, a real treasure trove of data that tells us where the retail and cloud giant is headed. Before we jump in, if you love getting straight, no nonsense takes on these filings, make sure you're subscribed and ring that notification bell. Also, we have a fantastic community over on Discord talking all things business. So join us there. The link is in the description. All right, let's get straight into the heart of it. Amazon's financial statements are always a juggernaut, and this report for the quarter ending June 30, 2025 is no different. First up, the income statement, a really good place to get a sense of how Amazon is doing. Total net sales for the second quarter of 2025 hit an impressive $167.7 billion. That's a solid jump from $147.9 billion in the same quarter last year, a roughly 13% increase, which is pretty strong growth for a company of this size. Now, what's really powering that growth? Well, look no further than Amazon Web Services, or AWS, their cloud computing arm. AWS sales alone raked in a massive $30.8 billion in this quarter. That's up 17% from last year, showing that companies are continuing to rely on Amazon for their cloud needs. And when you look at operating income, which is basically profit before interest and taxes, Amazon brought in $19.17 billion, a nice bump from about $14.7 billion last year. The international segment also saw a great rebound in operating income, jumping to $1.49 billion from just $733 million last year. That's a huge turnaround, but all this growth comes at a cost, and you can see that in the expenses. Technology and infrastructure costs jumped by 22% to $27.16 billion. This is likely due to Amazon continuing to invest heavily in its data centers and AI capabilities, which are crucial for AWS and other tech initiatives. Cost of sales also saw a significant rise, up 10% to $80.8 billion. This is largely in line with their increased sales, but it does mean that the cost of getting products to customers is remaining a major factor. Speaking of products, let's check out their inventory numbers. Amazon reported $40.8 billion in inventory as of June 30, 2025. That's up from $34.2 billion at the end of 2024. They're clearly stocking up for future demand. Amazon is a global company, so it's no surprise they hold a lot of cash in different currencies. They had about $19.9 billion in foreign currencies. At the end of June 2025, this exposure to different currencies can be a double-edged sword, meaning they can benefit when the dollar weakens, but can also see their reported numbers affected when the dollar strengthens. What's really telling though is their free cash flow, which is basically the cash left over after they pay for their operations, and capital expenditures. Amazon reported a free cash flow $18.18 billion for the 12 months ending June 30, 2025. This is a significant drop from $52.9 billion last year. Amazon is clearly investing heavily in its future, likely in AWS infrastructure and physical operations. This is a sign of aggressive investing heavily in its future, likely in AWS infrastructure and physical operations. This is a sign of aggressive investment, but it also means less cash is readily available in the short term. Looking at their commitments, they have over $366 billion in contractual obligations. This is a huge number and includes things like lease liabilities, debt financing obligations, and unconditional purchase obligations for things like digital content and energy. It shows Amazon is committed to long-term expansion and contracts. Amazon is also exposed to market risks, primarily interest rate changes and foreign currency fluctuations. They manage this by investing in investment-grade securities. But their debt's fair value can change with interest rates. Fluctuations in foreign currencies can impact their international sales and foreign denominated cash holdings. And now for the risks and legal matters, Amazon is facing intense scrutiny from regulators around the world. They mention ongoing investigations related to competition and consumer protection rules, especially concerning their own online stores and AWS. This is a significant risk because if they lose these cases, it could lead to massive fines or even forced changes to their business practices. We also see mentions of patent infringement lawsuits. This keeps happening to big tech companies, and Amazon is definitely not immune. It's worth noting that while AWS is a profit driver, their international segment is also showing strong recovery in sales and profitability, which is great news for diversification. On the controls front, Amazon states that their internal controls over financial reporting haven't changed significantly. This means their reporting mechanisms are generally stable, which investors like to see. A small but notable detail is that Brian Olsavsky, their CFO, has a trading plan to sell some of his shares. This is pretty normal for executives and usually happens as part of prearranged plans to diversify their holdings. So what's the big picture here? Amazon is firing on all cylinders with strong revenue growth, primarily driven by AWS, and a recovering international business. Their investment in infrastructure is aggressive, which is a good sign for future growth, but it's eating into their free cash flow in the short term. The regulatory landscape remains a significant risk, with many ongoing investigations that could impact their operations. Overall, Amazon seems to be steering the ship in a very forward-looking direction, prioritizing long-term investments even if it means short-term cash flow impacts. Their strategy appears sound, focusing on cloud growth and expanding their global reach despite the competitive and regulatory pressures. They're still a dominant force, but investors should keep an eye on those regulatory risks and the increasing capital expenditures. And alright, that's our deep dive into Amazon's Q2 2025 report. What do you think about their aggressive investments and those regulatory challenges? Let us know your thoughts in the comments below. If you found this analysis helpful, smash that like button and subscribe for more corporate breakdowns. Don't forget to join our Discord community for more great discussions. Thanks for watching. See you next time.